Hey guys, this is Karthikeya Kantwal from Apex FinServe and I'm back with a fresh dose of expiry analysis for you guys. Now, without wasting much time, we'll discuss other things later, but moving directly onto the charts, starting with, as usual, the equity side of things first. So, the first trade that we have is on Hindalco, where we are going to go for a simple short entry because after a sustained high low, we do have a clear range bound or a potential double top formation as of now. So we're going to go for a short at the nearest available row reversal level at 460. Stop loss at 465. Idle targets 1% on the downside, assuming that we get a straight pullback to at least 452 or 450 levels. The second trade that we're going to have is on HUL. Now HUL, we do have a potential range formation here, but it might even transition into an ascending triangle pattern based on the current chart scenario. So it's a simple pullback based demand zone entry at 2770. Stop loss at 2750, 2740. Idle targets 1% on the top side. The third trade that we have is on Cipla. Now, Cipla is a chart that is similar to HUL for now because you had a sustained high low structure and you also have more or less of the termination or the final part of an ascending triangle in the running right now on the hourly time frame, which is a decent time frame for chart patterns themselves. We're going to go for a breakout based entry, go long only if you have a healthy candle closing above 957, stop loss at 947, idle targets at least 0.8 to 1% on the top side. The fourth trade that we have is on M&M. Now M&M has broken out of a trading range pretty violently over the last couple of days. So we're going to go for a simple pullback based short entry at 760, stop loss at 770, idle targets 1% on the downside. The final equity trade for tomorrow is on M&M. This chart is really similar to what we had for Hindalco, in the sense that you do witness a structure based invalidation of pretty strong running high low over the last couple of days or at least a week. We're going to go for a short at the nearest available roll reversal zone based trading range at 1450, stop loss at 1470, idle targets 1% on the downside. Moving on to the index side of things, because it has always been so that you guys wait pretty much only for the index side of things. Starting first with Nifty. Now, going just by the charts, there is one problem that we have yet again is that lack of historical information at the recent trading levels, which does mean that we have to take all these levels with a grain of salt, as pretty much most of the rules have been modified to take aggressive definitions of these zones into consideration. As of now, I would say you have a critical sustenance level from about 17,320 till 17,340. If this on a pullback based assumption, if that is sustained, we might see a straight up move all the way till 17,400, followed by 17,450, which would lead to a fresh new swing high. If that is not sustained, we will see a pullback to the lower demand zone at 17,260, followed by 17,220, followed by 17,200, which is important support. Going by the option chain for tomorrow, as it is the expiry, I have immediate resistance at 17,400 with about 858,000 added contracts. A pretty decent number, significant at 17,500 with a hefty 1 million addition on the contracts. However, even on the support side, it's the same thing, with immediate support having 1 million positive open interest or change in contracts at 17,300, which is literally right here. Significant at 17,200, as I said, it's an important support with about 680,000 added contracts. The PCR comes out to be at 0.94, which happens to be on the moderately bearish side of things, but isn't really that bearish enough to sway our bias completely to that side. For tomorrow, I would say that this zone, based on a pullback interaction, is going to be critical to decide my bias for the entire trading session. Moving on to the second chart, that is Banknifty. Now, one key difference that you have here on Banknifty is that it is fast approaching the nearest swing high, significant swing high, whereas on Nifty, the structure is a bit dissimilar in the sense that the nearest significant swing high happens to be pretty much the all-time high. On Banknifty, that's not really the case. You have the significant swing high at about 36,950 and the all-time high at about 37,130, 37,150. For tomorrow, I would say that this is not a pullback based interaction, but I would say if the price manages to sustain above this level of 36,800 to 36,850, it's a 50 point region. If the price manages to sustain above that, we might see a really quick retest of the nearest swing high that happens to be at 36,950, followed by a 37,000, which is a big round number. But I do not see all-time highs being made, but the option chain does state otherwise. But based on the charts, I don't see that kind of strength, at least not right now. If that is not sustained, if the immediate trading zone is not sustained, we'll see a flash pullback or retest of the lower level of 36,700 followed by 36,600. Based on the option chain for tomorrow, the problem here is for the call side of things, there's no really positive change in open interest, which does mean that they are skeptical of these levels still holding up as resistances, and they do believe that it's going to be broken out or at least tested strongly tomorrow. But still, we have immediate resistance at 37,000 with negative change, but total of 1.9 million contracts, which is still hefty, followed by significant at pretty far away, that's the best I could find, at 37,500 with 1.4 million total standing interest. On the support side of things, it's the exact opposite with massive addition at 36,700 with 950,000 added contracts. So based on the option chain, 36,700 seems to be the decisive support level. After that, we don't really have any strong support level all the way down till 36,500. Based on charts, 36,800 is the deciding level, so you have to find a middle ground to balance both of them. Significant support comes out to be at 36,500 with a small but still noticeable 165,000 positive change in open interest. The PCR comes out to be at 0.91, which, just like Nifty, is moderately bearish. Just keep in mind, it's not really something that's going to sway our bias completely to the offside. For both the indices, Nifty and Banknifty, we do have immediate trading zones which are going to be given a lot of priority for at least the first 1 hour, which will decide my bias and hopefully yours too for the entire trading session. Now these are all the charts that I had for you for tonight. This marks the end of today's analysis video. And as far as the mentorship batch is concerned, the first week of the September batch has started. And thank you guys once again for showing all the love and support regarding the program and to the Apex channel as well. I hope you have a wonderful, green and exciting trading session tomorrow. As usual, if you like the analysis, if you like the videos that we have been making, please make sure to like the video, leave a nice comment, subscribe to the channel as well, and don't forget to hit that bell notification icon. Thank you so much for watching. Have a good night. Bye.